Welcome to The Roll Forward, a podcast for the next wave of finance leaders, especially those looking to transform their roles by making smarter, faster, and more profitable business decisions using the power of technology and a forward-looking approach to finance. Listen in to learn how to get out of the back office trenches and become a more strategic partner within your organization.
Hello and welcome to another episode of the Roll Forward podcast. My name is Joe Michalowski, and this episode is brought to you by Mosaic, a strategic finance platform that transforms the way business gets done. And today our guest is Alex Song, Head of Finance and Capital Markets at Ramp. Alex, thanks so much for joining us today.
Yeah, for sure. Thanks for having me.
Cool. Well, super excited to have you on. Ramp, obviously big in the news as we're recording this huge funding round that you guys just landed. You guys are darling of startup media, so this will be a fun one, and I know we have a good topic lined up. So before we get going though, do you mind just giving us the 2-minute background on who you are, how you ended up at Ramp, and kind of what the work is that you're doing there?
Yeah, definitely. So like you mentioned, I run finance and capital markets here at Ramp. I've been here for just under 2 years. It's been a pretty tremendous 2 years, I have to say. I
Yeah.
was the first finance hire. I did all of our accounting, FP, and all of our middle back office work, as well as, a little bit of the fundraising, managing the balance sheet, managing our investments and whatnot. And it's been absolutely tremendous. I will say though, this actually is my first operating role. Prior to joining Ramp, I spent basically the last 11 or 12 years on Wall Street, actually, predominantly as a fintech investor, focusing on lending specific companies. So a lot of balance sheet heavy businesses, a lot of businesses that needed some sophistication around managing its cash, managing its capital, et cetera. So if you think about the lending clubs out there, Prosper,
Yep.
Sunrun, Open Door, et cetera, there's this very specific class, right, of fintech companies that need a balance sheet. And
Yep.
so that's really where I spent the last number of years in the industry, was analyzing these companies, investing in them, getting to know them, and kind of in a roundabout fashion. That's actually how I came across Ramp as well, right?
Wow.
Because Ramp, and we can get into this, but we also have a quite sophisticated capital markets program. We manage a balance sheet, and it was a nice fit to switch from the investing side to the operating side. Kind of now I'm sitting on the other side of the table, but yeah, this is my bread and butter.
Yeah, I mean, so I knew, obviously I know what topic we're talking about, and I'm excited about that, but didn't know the background about all the work that you did with those balance sheet heavy companies, which makes the topic that we're going to talk about today make a lot more sense and kind of how this came to be. So what we really brought you on to talk about is crypto on the balance sheet, because of the many innovative things that Ramp has done and that you all have done over the last couple of years. One of them, I saw your article, was investing in stablecoins as part of like your treasury function, just taking your money and putting it in a very untraditional place at the moment, I would say. So just right off the top, would love to hear the quick background on that. Like, what made you decide to go down that road as opposed to more traditional investments?
Yeah, totally. We published that blog article, I want to say maybe 3 months ago now, right? Something like
Yeah.
that. And what's funny is that was probably one of the most kind of engagement generating, most viewed blog post pieces that we'd ever published
People love
here at Ramp.
crypto. It's
People love their crypto, right? People love their crypto. They're super interested, they're eager, they're engaged. I probably had a dozen or more, several dozen founders and CFOs reach out to me about this topic, just asking like, what's going on? What's the deal? But yeah, I mean, long story short, I think we started working with Circle on sort of an exploratory basis
Hmm.
early last summer. So that's almost a year ago now. We
Yeah.
started chatting about stablecoins. We started chatting about USDC. At the time, they had no product yet, right? They knew that
Oh,
they were
really?
going to launch this thing called a Circle Yield. But at that moment in time, it wasn't quite built. And
Hmm.
so the timing actually worked out pretty well. We did quite a bit of research and diligence into what exactly we were allocating into. Meanwhile, they were building the product all at the same time. We took our time, they took their time,
Yeah.
right? And then finally, right around September, October of last year was when we first put our first dollar out. We
Wow.
deployed and we got some USDC on the balance sheet. And as you can probably surmise from our blog post, it's been a very nice partnership over the last couple of months. We're generating a pretty high yield on that allocation. So that's not, but yeah, I mean, I think the initial impetus really was they were kind of exploring this new product. We were looking for investment alternatives and we sort of almost found each other. And
Yeah.
it's been a great experience.
Amazing. I love that you kind of started down the same path together. That's a really interesting side of the story because, I mean, the story is interesting in and of itself because it's so untraditional, but really cool to hear about how you kind of came up as, I would imagine, like the earliest of adopters with Circle. I'm sure they have some other early customers, but really nice to hear that. I want to take a step back because obviously I'm gonna ask more questions about what this process looked like to get this going. But for the uninitiated like me, stablecoin, I hadn't heard of it until I read this article from you and then we started talking about this. So beyond the basics of like, I would imagine the name in and of itself would indicate that it's more stable than something like a Bitcoin. But for the uninitiated like me, do you mind explaining what this is in comparison to something like a Bitcoin or more traditional cryptocurrencies?
Yeah, totally. I will caveat this by saying that I am no crypto expert. So
Yeah.
what I know is only kind of the reading that I've done and the industry research that
Yep.
we've done here. So in a nutshell,
Yep.
stablecoin or stable coins as an asset class, they are, tradable assets, right? They exist on the blockchain. I think in form and function, they don't look that different than Bitcoins or
Sure.
Ethereum and whatnot. The difference is that there is a currency peg, right? There's supposed to be this peg. So I think that if you go to Belize or if you go to Panama or whatever, like the local currency sometimes gets pegged to the US dollar, right?
Yeah.
With stable coins, that's also the intent. One coin of this thing, right?
Yep.
It could be USDC, it could be GUSD, it could be Paxos, it could be Terra. There's a few stable coins out there. The idea is basically that this thing, this token, we're going to
Yep.
peg this one for one for a US dollar. And I think there's a couple euro pegged crypto things out there as well. Those are also stable coins. But that's really it. That's the idea is you establish a peg and this thing becomes kind of a free flowing tradable asset. And ideally, knock on wood, the peg doesn't break, right?
Yeah.
Ideally, one USDC is equivalent in value to one USD, right? And so that's really the main gist of it. How different stable coins are set up and constructed and the peg is maintained, though, that's where the secret sauce comes from. There's a lot of differentiation between the different stable coins out there. How dispensable are some of these pegs? How strong, how weak are? That's really the secret sauce, right? That's where there's a lot of diligence that goes in to kind of figuring out, all right, who do you back? Who do you
Yeah.
want on your balance sheet, etc.
Gotcha. We're gonna get into some of those decisions in a little bit, but right off the top, I mean, you're explaining this and you're saying that the amount that you know about this topic is really just the research you did to start doing this project. So I'm guessing when you went to leadership, I mean, I'm sure they're not just like, "Hey, Alex, like here's some money, like go invest it as you will." I'm sure there was a tight knit conversation with leadership at Ramp to decide to do this. What do those conversations look like? There must have been some like decent skepticism when you surfaced this, or did somebody come to you and like give you this idea? What did that look like internally?
Yeah, totally. You're absolutely right. I mean, this is not a no-brainer. This is as
Yeah.
far from a no-brainer as you can get, right? It's untraditional and it's new and it's uncomfortable, right? So what I'll say is that a couple of things really helped. One is actually there was close knit, I would say, a high amount of professional and personal connectivity between our executive team and the executive team at Circle. So one, there was a pre-existing
Nice.
relationship, right? And we knew that they were working on this and they were working on this and they kind of knew that we might have been interested in being one of these first pilot
Sure.
customers almost of Circle Yield. And so that component certainly was helpful. The second reason why this is helpful is because, and you can probably guess, we're a fintech company, right?
Yeah.
I think that if we were just non-financially oriented, if we're just like a semiconductor or manufacturing or services company, the story might be different. But
Sure.
because we're a fintech company dedicated to serving businesses, right? We sort of view ourselves as we want to be in that seat and take that role of being early adopter, being a thought leader
Yep.
and investigate and unsurface, right, opportunities. So if you think about what Ramp itself does, well, we try to unsurface savings opportunities, right? We try to automate things. We try to figure out where's the low hanging fruit inside an XYZ organization. How can you save money? And so I think as part of just driving that thesis, right, we knew that if we wanted to be innovative across other facets
Yep.
of corporate balance sheet, corporate finance, et cetera, we knew that there would be an engaged and curious audience, right, who would be looking to us for thought leadership and whatnot. So there's definitely the component of, hey, I am a fiduciary. I need to protect my balance sheet, and let's figure out how maybe we diligence this. And then there's also the component where it's like, well, if we do a really good job here, there could be dozens, if not hundreds of companies, right, that follow in our footsteps. So let's do right by them
Yeah.
as well. And that was definitely something that, to their credit, my executive team, board of directors, et cetera, everyone kind of saw that there's kind of the tangible, and then there's also really the intangible benefits of pursuing a research project like this.
I like what you're saying about thought leadership, and this is really the purest form of that. Like, this isn't just like publishing, an article, although you did publish the article, but like first it requires doing something that is leading an industry. I had a coworker, because I've worked on a lot of thought leadership as a content writer in the past, and a coworker who used to say, everybody wants to be a thought leader, but nobody wants to have the heavy thoughts. And so like it starts with having this idea that you're going to kind of go out and do something that is different, and it takes taking a risk. Like, you need to go out of the comfort zone and you need to actually do this. And so I want to get to results. I want to get to all that. But your article said you spent 4 months kind of doing your due diligence on the risks and like mitigating factors for all of this. There was like, I can't remember how many, there was like a laundry list of topics that you had to go through. So I will save you the pain. I'm not going to ask you to go through every single one of them, but could you walk through like maybe like your top couple of considerations that maybe like you internally you had to deliberate on the most to get through this decision?
Yeah, definitely. Definitely. I think, well, I'll give you one critical juncture, right? Our
Yeah.
first critical juncture was, all right, now we've identified stablecoins as maybe a reasonable substitute for just fiat and US dollars, right? Which stablecoin do you actually pick? I mean, that's question number one, right? Is
Sure.
we could have gone with a variety of them, right? Or multiple of them. And there's a lot of different stablecoins out there. What we found to be especially compelling about USDC, specifically this one, right? What we
Yep.
found that was nice about it is governed and it is managed rather conservatively. So how USDC works is, I'm being a little over reductive,
Yeah,
kind of.
this is not a podcast where we can explain every
Yeah,
nuance of every crypto topic known to man. So
yeah.
totally understand you on that, but excited to dive
So
into it.
so what we liked about USDC is that you essentially, USDC is run by a consortium of companies, right? Circle is one of them. So they're
Yep.
obviously, going to be one of the bigger proponents of this ecosystem. But basically, you convert US dollars into USDC. And now I
Okay.
have USDC, and now there's US dollars just sitting there somewhere, right? And what's crucial and what's critical for us is understanding, okay, where is the USD actually going,
Yep.
right? And it turns out that for USDC, it is very easy to verify, and it's audited on a regular basis, and there's attestation from Grant Thornton as well as other organizations that
Nice.
indicates that cash, right, it's not being invested in stocks, it's not being invested in junk bonds, it's not being invested in all this other
Yep.
stuff. It's basically invested in cash equivalents, so very
Okay.
short dated US treasuries and stuff like that. It's not sexy, right? It's not meant to do anything crazy. It's really meant to just hold your cash, right, for, some amount of time. And so I think that was important for us. Let's put it that way,
Yeah.
right? Let's make up a number. I don't know what the number is today, but let's suppose there was 30 billion of USDC outstanding. Then I can say with a high degree of confidence that there's going to be corresponding 30 billion of USD equivalent of very short dated liquid high
Okay.
quality assets that's backing that, right? And that's very, very important. I think USDC is very good about being transparent. That was our, I would say, our very first kind of critical juncture, is just underwriting, like, what is the thing that we're buying, right? I would say that's pretty important. Area number two, I'll go quickly on this. Area number two is just, how are we actually generating these returns and
Mm.
understanding the value chain, right? Because, if you put money in any average FDIC insured, savings account, you're getting what, 20 bips, right? If you're lucky, on a good day. So if we're using Circle Yield or any of these other products out there, stablecoin products out there, how
Yeah.
is it that there's a 5%, 7%, 9% rate of return? Understanding that value chain and understanding, okay, who's actually originating some of these underlying loans, who are the underlying borrowers, and also where does the value chain go and where do we sit in it, helps us understand the risk reward.
Sure.
And so that in of itself is probably actually the biggest piece of diligence, is understanding who's sitting on the other side of the table, who's paying us this annualized yield, right? That took a while.
I know you said you wanted to go through quickly, but just as a follow-up, like if this took months or if you're saying it took a while, like what does that process actually look like? Like how do you go through and verify that? Is it just conversations with Circle? Is there a numbers process in the background that you need to go through like to verify these things? Like what exactly does it mean to go through that process?
There's a lot of smart people. There's a lot of smart people out there, and there's a lot of smart people in the crypto world.
Yep.
And fortunately, some of these are personal and professional connections. I think
Nice.
going through every possible avenue, right? I mentioned a little bit earlier, right? Which is like the value chain of where actually
Yes.
these dollars are going, where are they coming out? There's someone, right? That's someone's job. And
Yeah.
so getting to know who all these people are, understanding what their incentives are, understanding what they do on a day-to-day basis, right? So that might mean talking to your vendor's vendor, right? And making sure that, okay, well, if I'm wiring funds here, what is here? Is that an
Yeah.
overseas entity? Is it located in one of the 50 states? What are the legal and regulatory implications of that? And let's go talk to the guy, right? Let's
Yeah.
talk to the guy who's pushing the button. And so through the course of these several months, I would say, of the diligence process, not only did we diligence sort of who are partners, and their vendors, their vendors, and their vendors, and their vendors, right? We also looked at, a ton of other similar providers in the space as well. And we talked to all of them, and we talked to their vendors as well. So it wasn't as if we jumped the gun, we picked one guy to partner with and like, let's just do that. The process itself actually was quite comprehensive. And there are a lot of smart people out there, and a lot of people were able to essentially assemble a mosaic, right? Almost of fact patterns and different, things where it was like, wow, I actually forgot to ask that question of those people, but they gave me this something and that jogged something in my memory. So follow-up call, cool, let's
Yeah.
talk about this other topic. So it was an extremely, I don't know what the word is, but whatever is the opposite of linear. It was like the
Yeah.
opposite of a linear diligence
Circular,
process.
just like Circle. That's
Yeah,
it.
yeah, yeah, exactly.
Uh,
It was never stopping, to never being satisfied, right? And because the hurdle is that much higher, right? If I were to tell you, hey, I'm about to deploy my corporate treasury just in investment grade bonds, right? Or AAA rated treasuries. Well, okay, there's an S&P and Moody's rating on the thing. Let's just go buy it, right? So the amount of kind of diligence there is probably somewhat surface level. For something like this, because we are starting literally at square zero, square one, we really had to essentially establish the entire fact pattern, the
yeah.
ecosystems, who the players are, what their incentives are, and where do we fit into that group.
I want to take a little bit of a tangent and zoom out a little bit because everything you're talking about is so much of what the theme of our show is supposed to be. And it's really just like we want to, like, as a company and as a podcast, and, I think similar to you when you were talking about being a thought leader, there's this traditional view of finance as like the back office function, the number crunchers. There's not a lot of like relationship building stereotypes built into the finance kind of ethos over the last like 30 years. But everything you're talking about is like, I need to go out and I need to build relationships with all of these people. It's not a comfort zone for 20 years ago finance teams. Like it seems to be like a new kind of strategic path forward. So I'm curious, like, is this the norm for you? Is this how you operate all the time? Are you big into just relationship building as a function? Or was this something where it was like, okay, like I know that in this field in particular versus like more traditional investments, I need to go out and I need to do this? Or do you just do this all the time for all of the decisions you make?
Yeah, that's a good question. So I would say maybe three things. One is this is literally what RAMP is about, right? RAMP is about this concept of taking a lot of the menial operational tasks of the day-to-day work with month-end close and a
Yep.
lot of the payables and automating away, right?
Yep.
So that everyone on the finance team is empowered to do strategic projects and pursue some of
Yes.
these cool, very impactful projects like this, right? So that what you're describing is literally, our North Star, right? Is
Yeah.
we want folks to be impactful. We want folks to have the latitude, the freedom, the creativity to pursue these types of projects, right? So that's just the first thing, that's literally our North Star. The
Love it.
second thing I'll say is that we like the fact that we're building in the open. I mean, if you talk to our
Sure.
CEO, our CTO, our executive team, we're all about building in the open. So research projects, anything that we're exploring, if something pans out, if something doesn't pan out, we want to be transparent with the world and just say, hey, this was our experience doing this, right? So I think people like the authenticity and they like the transparency of what we do. So, if we went through an audit, we'll literally just jot down our notes, like, here's what we liked, here's what we didn't like, here's what didn't go well. And then we'll put that out there, right? And hopefully have that act as a manual or as a guide, right,
Nice.
for other folks. So I think we definitely strongly believe in, leading by example, right? And building out in the open. The third thing I would say, going back to your question, is, to be honest, this is actually what I did, right? For the last, 10 or 11 years, worked as an investor. You develop conviction, gather information, develop a thesis, and then you just say yes or no, right? And
Yeah.
so I took a lot of from my prior life, and I took that with me to this experience, which is I should treat this as investment committee, right?
Sure.
Because I have to make my case to the people I work for, right? Who do I work for? Shareholders, board of directors, blah, 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 these people, right? And so I should almost think of it as, how do I convey my thesis to them in an effective way and make sure I check all the boxes, right? So I literally put together
Yeah.
this thick investment memo. Here's all the Q&A I did. Here's all the diligence I did. Here are the materials I collected, right? Here's all the people I talked to. And going back to your point, it's almost second nature to me because that's literally what I did the last 11 years of my life, right? So I think that actually
Yeah.
transferred over pretty well. Look, my job is not to be an investor. That's not my job, right? I mean, I'm here to run
Right.
finance. I'm here to make sure we get the bills paid. I'm here to make sure our month end closes and whatnot. But at least this one piece of it was a very nice kind of carryover from my former life.
A nice kind of beautiful melding of your two worlds as you kind of transition to in-house finance. That's really great. I love that ramp in Mosaic. Very much aligned on what we think kind of the future of finance looks like. Always great to chat with people that are like-minded about that because it's just been an underserved or underappreciated industry or kind of profession for a long time. And it's great that there are companies like Ramp that are helping people surface those strategic capabilities. So love to hear all that.
Yeah.
That's amazing. I know it was a little bit of a tangent. We got a little away from the crypto talk for a minute, but I'm going to get back to that because I do want to know. So it's been like 3 months since you wrote the article, but you said a year since you invested in stablecoin, right? Like you said, you were coming up on a year since
Since we
investing.
started working
Uh,
with the team at Circle. Yeah.
right. Gotcha. So obviously, like we talked about some of the leadership conversations that went on, but now like you need to start reporting these investments on the balance sheet. We were talking earlier about being like a balance sheet led sort of company. Are there any challenges in reporting stablecoin as opposed to a more traditional balance sheet? Is it just another line on the balance sheet? Like what does that look like operationally for your
Great
team?
question. How we get this out. We're actually in the midst of our Big Four audit right now. So we've got folks literally poking through our
Damn.
financial statements, looking at all of our reporting. And this is going to get wrapped up over the course of the next month or so. So I will let you know how that goes.
Oh, we're gonna have to do a
Yeah,
part two.
exactly. Thankfully, here what I will. Thankfully, I think crypto is a little bit more of a known entity these days, right, than it was a few years ago. And
Sure.
so what that means is everything from legal to accounting to outside, consultants and whatnot. There's just a lot more expertise within the space. And so if you want to talk about, just how do you account for crypto on the balance sheet, I mean, there's a bunch of guys that we know who are that,
Nice.
and do have a repertoire of additional service providers and vendors who are able to help us out on stuff like this.
Really in the weeds question. Maybe too in the weeds. I'm not sure. So just push back on me. But are there any? I know you said USDC was heavily governed, but I don't know if that means that there are unique regulations that you need to follow as a finance organization. Is this like because you're an early adopter? Is this a largely like unregulated kind of side of finance? Is there anything they have to consider from a compliance regulatory standpoint that isn't average for your usual balance
Definitely,
sheet
definitely.
reporting?
The hurdle is this sort of stuff. And by the way, this is also why as not this is in terms of an allocate going through the research process and diligence. 5+% of our balance sheet is still invested in traditional assets, right? Mutual funds,
Sure.
ETFs, bonds, investment grade treasuries, whatever it is. So this is a very small allocation. And part of the reason absolutely is just regulatory clarity, right? So, I mean, the SEC, the Fed, all of these people have opined someone's really come out and said, yes, this is good, or no, this is definitely not good, right? So there's definitely a kind of gray zone that this is still I'm hopeful though that I think the regulators will come out with a little bit more maybe clarity in the coming
Yeah.
quarters or years, and I think that would definitely help the long. So for example, right, I mean, I'll give you a couple
Interesting.
examples. We'll mistake this for a CD, right, or certificate of
Sure.
deposit. No one's going to mistake this for a savings account. There is no FDIC insurance on stuff, and I want to make that clear, right? Anyone who's looking at this as a substitute for a savings account,
Yeah.
this is not the right place, right? Just to be clear, definitely a whole host of things because of that, right? So do you side by side and do you compare it with the HSBC high yield savings? No, total sentences, different conversation, even, right?
Yeah.
That I want to be very clear is, as much as I've spoken to tons of founders and CFOs and other corporate treasurers about this particular opportunity, one of the first things that you could never overstate the importance of this is that this is not, your garden variety savings account. And you want to make
Yeah.
sure that you understand that you convey that to your
Yeah.
stakeholders. You can do is misrepresent, what exactly you're allocating to.
True. That makes total sense. I'm looking forward to part two where we go into the audit results because I know our co-founder Joe, I know you said you're not the biggest into the crypto scene. My co-founder Joe Garofalo is very much into the crypto scene, so he was very excited to have this topic come on the podcast. And so maybe I'll drag him on for part two and have him ask you some harder questions about how that balance sheet is looking at the
Yeah.
time. For now, I think it's important to address, we talked about it earlier, but the reality is that Ramp has a lot more cash on hand than maybe the average like VC backed company. You guys are doing amazing. Anyone who's seen startup news knows Ramp. You guys are enormous and just closed like another round, ton of money. So I'd imagine that gives you more flexibility to take some of that cash and make this untraditional investment. But if we zoom out just a little bit, I know this is not an investment advice podcast, not looking for that specifically, but when do you think it makes sense for a company to make this kind of investment? Is it about how much cash you have on hand? Is it about, a particular like level of maturity in the finance function? Like how does another company go about making this
That is
decision?
a great question. There's a rather large cohort of founders that I talk to that I'm like,
Yeah.
no, you shouldn't even care about this. So you're absolutely right. I think the heuristics that you want to use for this, one, right, is this something that you can do that generates some intangible benefits? And for us, as we discussed, it did, right? Because it falls
Right.
in kind of the whole ecosystem of being strategic, being impactful, in terms steward of your capital, right? So for us, it definitely makes the heuristic I would say is make sure that the impact is actually meaningful, right? So in other words,
Sure.
you have dollars of cash on your balance sheet and you allocate X% to stable coins, and then you're making roughly, I don't know, 6, 7, 8, 9% yield on that. And you just do the math, right? What is the outcome of
Right.
that incremental yield? And is that worth your time? Going through months of diligence, doing all of this work. And if it ultimately that winds up being a $30,000 decision, was that worth your time? I would argue that for most
Right.
entrepreneurs, it probably isn't, right? I think you're just very busy building a company, right? And you should not be
Yeah.
making, I would say, tactical decisions like that. As that number swells, right? If you think about the math I just did, as that number goes up and uplift in dollar yield, then all of a sudden you're like, wait a minute, I'm in a position where I can generate this much yield, and that allows me to hire 10 extra engineers. Okay, wait a minute. That then
Yep.
a little bit more impactful, right? So I think
Yep.
that's probably one way of looking at it, which is just how impactful is this decision at the margin, right? If it's letting you hire a whole team of engineers, all right, maybe take some time and then think through it. And now the second methodology I would think about is runway, right? Excess cash and
Mm.
runway. So I actually over a month and a half or so,
Mm.
month ago, I also published another blog piece about drafting the treasury policy, building an
Yes.
investment
Saw that.
policy, tactical asset allocation. And as part of that discussion, I talked about the concept of liquidity management and runway, right? And if you had a year or maybe more than a few years of capital that you're not going to burn through and you have quite a generous amount of runway, then what that means is you
Yep.
can probably be a little bit more flexible with how you're allocating capital, whether it's mutual funds or ETFs or bonds or 2-year bonds or 5-year bonds, right? Or 6-month bonds.
Yep.
So with flexibility, then you just want to be a little bit more nuanced, right? About capital allocation. And so for RAM, we're key in that, we have a multi-year kind of operating runway with how much cash we have. And so what that means is
Yeah.
also we can be a little bit more creative and a little bit more nimble with how we're managing.
Yeah, makes total sense. I kind of expected that to be the answer to an extent, but we talked with, oh, and by the way, so we've mentioned like 2 articles so far. For anyone listening, I will make sure they are in the show notes. Everybody should go check out what Alex says. Always nice to hear from people who are in the weeds doing the work every day. It's the best kind of content for sure. So I'll make sure that happens. But also, we had an episode recently we published with Brad Silicani. He's the head of finance at Anrock, and he has a background in treasury from Dropbox. And so talked to him about kind of the current market conditions and what people are kind of projecting for the year ahead. And he gave a lot of insight into how he thinks about investing from like a treasury perspective, and just interesting to kind of marry kind of what you're saying to what he's saying. And one of the main things that he kind of said, he said, at the end of the day, like, you're not getting paid to invest. Like you said, your job is not investment. Your job is to build a company and to be that steward of capital. And so I think it makes total sense to kind of weigh the pros and cons here. Like, is the result like good enough to actually make a difference in your business, because that is your ultimate goal, and kind of deciding where that line is for you and where it makes sense to make that investment. So I think that's really
That is
great,
so
advice for
that is
people.
so on point. I mean, I recently went through one of these exercises where I sat down and I did a calendar audit of myself, like what literally how my time is, allocated a given day, any given week.
Yep. Dangerous.
Trust me. I mean, the amount of time, thankfully, the results are pretty much what I expected. But yeah, absolutely. I mean, you
Good.
are definitely not hired and you're definitely not paid to be an investor. I mean, you are
Yep.
recruiting, you're building, right? You're setting up processes, you're managing, right? Hopefully
Yep.
you're working cross-functionally with other teams. And it's almost embarrassing in the grand scheme of things how little time I've actually spent on, corporate specifically.
Yeah. Listen, I think Ramp's doing just fine. Maybe embarrassing isn't the right word. Alex, I think don't be so hard on yourself. I think we could cut you some slack. I think you're doing all right. So I could just keep asking you, peppering you with questions all day. I want to get to sort of bigger picture lessons learned. And the biggest question I have for you is really like, I know it's early days. Like, this is going to take a while to really decide like how much this pays off for Ramp with the new round of funding, with the new excess cash on hand. How have things gone to this point, results wise? Are you thinking about investing more in this space, or was this like a fun experiment and it's like it's worked out well, but there's better places that we can spend our time?
Is that this, right? Thus far, I
Yeah.
think the partnership with Circle has been absolutely tremendous. I think
Nice.
sides have benefited. I mean, we saw an absolutely huge uplift in our corporate treasury yields. I mean, I think I actually wrote about this, right, in
Nice.
my blog post, which is
Yep.
we doubled our corporate treasury yield, which is
Yep.
like an obscene to think about because it's such a tiny allocation. But the
Yeah.
impact literally is doubling of a multi-$100 million investment portfolio. So from that
Crazy.
perspective, we're obviously very happy. On the Circle side, I mean, same exact thing. I mean, we were early and also
Yep.
appreciate that we are an early partner. What it means for us is that we almost had, on-demand concierge white glove service, right? Whenever we wanted to see a
True.
new type of reporting, a new type of dashboarding, we're very communicative, very open with the team at Circle.
Nice.
And they're said they're taking our feedback in real time and sort of building the tool around us, right? Which is again just something that you don't really experience every day. So truly, truly appreciate
Yeah.
it. And then on the ramp side specifically, I would say um, this is going to be an absolutely massive market. Particularly if there is more or mental regulatory clarity. I think that this right now is, probably a multi-hundred million or billion-dollar market, right? Only early adopters, only very kind of the first few folks are doing it. But I could definitely see over, maybe medium to long term, this could be a multi-trillion-dollar market. I mean, just think about the Apple, the
Jesus.
Google, the Microsofts out there sitting on hundreds of
Yeah.
billions of cash. Again, if each of these folks only allocated 2%, 5% into this,
That's a good point.
then, the next, right, on just how big this ecosystem could protect. And I think that one of the key learnings that we had from this experience is that when you think crypto, you think, oh, like this is a very alternative thing. And it's very like, at the financial ecosystem. And there's a lot of guys who are just trading stuff. They're day trading, they're looking at charts and whatnot. And I think our historical experience just over the last few months, and definitely with respect to some of our conversations we're having today with folks in the space, is that the corporate scene could be
Yeah.
huge. And by the way, I mean, that demographic and that ecosystem looks very different, right? This is core to corporate America, very conservative,
Yes.
very deliberate with how they make decisions. And I think if that community, embrace this, I'd really move the needle and kind of change the constitution of what, the crypto community, even looks like.
Yeah. And ramp right at the forefront, which is not surprising the way you guys are building a business. And just really cool to see your finance function, you specifically, just kind of not just letting ramp the company kind of lead the charge in industry, but, applying that to the work that you do as well. Cause that, it all funnels up. That's why ramp is leader. It's because every department is working that way. So really cool. Love to hear all that. Okay, Alex, I got one last question for you. It's a question we ask everybody that comes on, and it's kind of zooming way out from our crypto on the balance sheet chat, and just really want to know, what's one thing you know now that maybe you wish you knew at the start of your career?
Yeah, I think one of the things, one of maybe many things that I can take away from my career so far, work with the A team to the best of your abilities. And the A team doesn't just mean your boss or your coworkers, your colleagues. It also means your partners, right? Your partners and your vendors and folks that you work with, even outside of your company, your immediate comfort zone. I think that's something that I've come to appreciate more and more. When you have a highly motivated, highly driven, very ambitious team around you, it's just so much easier to unblock certain things, right? And I can probably pinpoint to one historical experience there. Let's set ramp aside because
We already know ramp is great.
I work with only A+ people. I mean, I think here at ramp, it's the perfect illustration of that. But even if you dial this back maybe 7 or 8 years, my second job out of school, I worked at Bain Capital in Boston, large private equity fund.
That's where I'm from.
Yeah, it was the John Hancock Tower. I was in Back Bay. And I have to say so much about just my work ethic and just even my kind of way of working with people, managing up, managing down, managing external relationships, right? I think it all stems back from, I think, the personal and professional credibility that I was kind of able to kind of learn and glean from my colleagues there, right? I think the folks there, first of all, it's been 7 or 8 years since I've even worked there. Why am I talking? But I think it was a very formative experience. I mean, really sharp, really smart guys, did well by others. Everyone was extremely kind, very nice, extremely driven. And it really rubbed off on everyone who was there. I don't know a single person that I've ever worked with at Bain Capital who, since leaving or who've stayed, who didn't have fond memories, of working there. That's one thing that I hope to emulate here at Ramp.
Love that. I think it's something you don't realize until you've been on one of those teams. Like, you don't think it's going to be that formative until you get there. I've had a similar experience with a team, and you just kind of think you're going to go along your career, and it's kind of all internal. It's what can I learn and who can I learn from? But no, I feel that completely in my line of work as well. Just the people you work with really matter. And I think that's great advice for anybody who's just starting.
And the best signaling mechanism is the alumni.
Yeah.
If the alumni thinks highly of the place and thinks highly of their ex-coworkers, that's a dream come true.
No doubt. Hopefully Ramp is on that path for everyone being like that. Hopefully we can do that at Mosaic as well. I think it's a good goal to have outside of building the company and all that. It's a nice way to think about things. So
yeah.
Love that answer. It's a unique one. I haven't heard that one before, at least not in that sort of context. This is great. But I just want to kind of wrap things up by saying thank you so much for being here. It's been great to chat with you, to learn about crypto on the balance sheet, to learn about your career and everything like that. But this is your time to shine, Alex. Where can people go to learn more about you, to learn more about the work you're doing at Ramp, anything like that?
I mean, before I even do that, I mean, I just want to say you guys also are a great example, right, of picking the right partners and working with the A team. I know that myself and as well as my FP&A and strategic finance team have really enjoyed the partnership with the Mosaic team, right? I mean, look, we all have the same North Star, right? Be strategic, automate away the riffraff, automate away the busy work, and make sure we're creating time to be impactful, right? And you guys are a great example of that as well. I think on behalf of the rest of my team as well, we deeply appreciate the partnership. We don't take it for granted, for a fact. So really appreciate your having me on the podcast as well. But I mean, you can find us on ramp.com. It's pretty easy to find us. You can follow us on Twitter. We're at TryRamp. And yeah, we're generally pretty accessible. We try to, big story of 2022 is just try to build brand awareness, right? And try to get in more companies out there, get our foot in the door and try to build out our customer base.
Nice. Well, very much appreciate the kind words. I'm going to relay them to the team. I think you might make our co-founder shed a tear or two. He loves hearing these kinds of things. So just wanted to say thank you again for taking the time. It's been good. And I will come back to you for part 2 when that audit is done. But it was great having you on the Roll Forward, and I hope we get to do it again soon.
That sounds great. Thank you so much.
Thanks, Alex.
Thank you for checking out this episode of The Roll Forward. This show is powered by Mosaic, a strategic finance platform that transforms the way business gets done. If you enjoyed what you learned in this episode, make sure to follow The Roll Forward wherever you listen to your favorite podcasts. Or visit mosaic.tech/podcast to get immediate access to all of the latest episodes.